Very good morning, everyone. Hope you all must be doing great. So let's discuss with the MTP mock test paper, which is recently released by the Institute for our January 2025 CA intermediate examinations. And today I'll be discussing about income tax. So first of all, Division A that contains multiple choice questions. I believe that you already have this MTP. In case you don't have it, I'll be providing the link in the description. You can easily go and download this MTP as well. Okay, it says write the most appropriate answer to each of the following multiple choice questions by choosing one of the four options given below. Normal, MCQs. So this is the case study which is given to us, and what is the best way to deal with the case study? First of all, you should read the questions. So before reading the case studies, I always suggest that please read the questions first. So it says, what would be the residential status of Mr. Raja for this assessment year? So first question is regarding the determination of residential status. Second point says, what would be the amount of income tax payable under the head income from house property in the hands of Mr. Raja for assessment year 24-25? So here we need to compute the income from house property. Okay. Third says, what would be the amount of capital gain would arise in the hands of Mr. Raja on transfer of shares of A Limited? So he must have transferred some shares and they are asking about the capital gain. So three questions. One is residential status, house property income, and capital gains. Okay. Now it would be good that now if we read the case study, it says Mr. Raja, an Indian citizen, age 61 years, senior citizen. Okay, has set up his business in Canada and is residing in Canada since 2009. Correct. He owns a house property in Canada, half of which is used by him for his residence, and half is given on rent, converted into Indian rupees, 12 lakh rupees. So what it is his Canadian property. This income is not arising in India. Nothing is said about received in India. So if this person is a non-resident or this person is a not ordinary resident, so we understand that this income should not be taxable, right? He purchased a flat in Delhi on 13/10/2019. Okay, it says Delhi flat, Indian. He has taken a loan from a Canara Bank in India for rupees 34 lakh for purchase of this flat. Okay. The interest on such loan for financial year 23-24 was 3 lakh 14,000 and the principal repayment was 80,000. Mr. Raja has given his flat on monthly rent of 32,500 since April 2023. Now, this is an Indian property, so this amount would be taxable in the hands of Mr. Raja, irrespective of the residential status. Remember, any income which arises in India, any income which arises in India is taxable for all. It is taxable for all. So, our one of the MCQ was regarding the house property income. So this person has purchased a property some 4 or 5 years back, and he's getting a rent of rupees 32,500 since April 23. Okay. The annual property tax of Delhi flat is 40,000. So he has paid municipal taxes amounting rupees 40,000 also. So it means that 32,500 would be his rental income. It could be his GAV. If expected rent information is not mentioned, it could be his GAV. And municipal taxes paid by him is 40,000 rupees. Then Mr. Raja, whenever he comes to India to meet his parents, okay, he pays this rent whenever he comes to India also. So this person is residing abroad and he comes to visit India. So he would be covered under one of the exceptions, right? You understand? If the person is an Indian citizen or person of Indian origin and he comes to visit India, then we don't see 60 days plus 365 days condition. We only see 182 days conditions, right? So if he is in India for 182 days, then we can say him as a resident, otherwise non-resident. But yes, there is one more special provision. If his income other than foreign sources is more than 15 lakh rupees, we know that we have one more provision also of 120 days. Let's see. Mr. Raja visited India for 124 days during the previous year 23-24. Before that, he visited in India for 366 days during the period 2019 till 31st March 2023. So what we have been provided? We have been provided that he is here in India for 124 days. And in last 4 years, it was the number of days was more than 365. So this person could satisfy our special provision provided now you have to see whether his income other than foreign sources is also known as Indian source income. So if it is exceeding 15 lakh rupees, so this person could be a resident also. Now, he had a house in Ranchi which was sold in May 2021. So he was having a house earlier which was sold some 2 3 years back. In respect of this, he received arrears of rent of 2,96,000 in February 2024, not taxed earlier. So this person has received arrears of rent. Very nice question. So you understand whenever there is a recovery of unrealized rent or arrears of rent, it becomes taxable in the year of recovery, right? Or when the arrears of rent is received, irrespective of the fact that whether you own this property this year or not, doesn't matter. So this income will become his house property income. But we understand that only 70% will become income, not the entire amount. 30% is the deduction which would be available from this arrears of rent. Mr. Raja has sold 10,000 listed shares. Okay, now they have started about shares now. Okay, and Mr. Raja wants to pay tax under default regime based on the above facts. Okay. So up till one of the thing which we can determine is his house property income, because he is receiving, because one of the MCQ was house property income. So he is receiving a rent of 32,500. So what we can do is, there is no information of expected rent. So this rent received would become GAV. GAV will become 32,500 into 12. So it would be 32,500 into 12, 3,90,000. This would be GAV minus municipal taxes paid. He is also paying 40,000 as taxes. So his NAV would be 3,50,000. Correct. So, and out of this NAV, it's a let out property, 24A deduction, 30% standard deduction would be available. 350 minus 30%, 1,05,000 would be 24A. 24B, interest on borrowing. And because this, he has taken a loan for purchase of house, so interest on borrowing is 3,14,000, and entire amount can be allowed. Would the it would be restricted to 2 lakh? No, it is not a self-occupied property. There is no limit for that in that case, in case of interest. So 3,14,000 is the interest, and principal repayment is 80,000. No, principal repayment doesn't play any role in house property. It would be available under 80C if this person would have been opting for optional regime. But if he is opting for default regime, I believe that I have read it. Yes, default regime he is opting, so 80C would also not be available. So, anyways, 3,14,000 would be the principal interest amount. Sorry, 3,14,000. So ultimately, it would be, from this property, there is a loss of 69,000. There is a loss of 69,000. And then we have arrears of rent as well. And arrears of rent is 296. And you have to do 70% of that, right? 30% would be the deduction. So 296, 296 into 70%. This will be 2,07,200. And this is a loss 138, 200. Correct. So 138 200 would be the house property income. Let us check this. 138 200 would be our house property income. So we got the answer for second is 138 200. Okay. Then Raja has sold 10,000 listed shares at a rate of 480 per share. Okay. An Indian company on 15/9/2023. He has sold shares for Indian company, again an Indian income. Okay, how much? 10,000 shares at 480 each, which he acquired on 5/4/2017 at a rate of 100 per share. STT was paid both at the time of acquisition as well as transfer per share. So it's a long term. And which long term? 112A, long term equity shares or equity oriented units. And because he has acquired it before 1st February 2018, so we know that the cost would be taken as this amount or the market value as on 31st March 2018, sorry, 31st January 2018. And they have also given the value on 31st January 2018. What's the value? It was traded on recognized stock exchange. Highest price 300, average price 290, lowest price they must have given 280. But we know that we take the highest price. We give maximum benefit to the assessee over here. So we take the cost as the highest price. So his actual price was 100 and this FMV is 300 is the highest price. We have to take 300. And of course, it is not more than the selling price also. So 300 would be the cost. So 480 we are selling it. 300 would be the cost. So 180 per share is your capital gain. And how many shares are there? 10,000 shares. Agree? So 10,000 into 180, that is 18 lakh. What are they asking us? What is the amount of capital gain arising in the hands of Mr. Raja? 18 lakh rupees. Agree. So we got this amount also. And now they are asking about the residential status. Now please see how much is the income from other than foreign sources, that is Indian sources. It is more than 15 lakh. We can clearly see here the amount is 18 lakh, and we will add this also. The clearly the Indian source income is more than 15 lakh, so that special provision is applicable to him, which says that if this person is at least 120 days in the previous year and in last 4 year at least 365 days or more, then he will become a resident. So this person will become a resident, correct, applying that provision. Also, if he satisfies 182 days conditions, then ordinary, otherwise not ordinary. So he is not satisfying 182 days condition, so this person would be a not ordinary resident. Resident but not ordinary. Resident but not ordinary resident, the answer would be B. Got it? Good. Case scenario. Let us come to the next scenario. Mr. Anay, okay, before reading it, again the same thing. We should read out the questions first. So this says, what would be the amount of deduction available to Mr. Anay under the chapter 6A for the assessment year 24-25? Okay. So we are required to compute chapter 6A deduction would be available. So if he is taking chapter 6A, he might be taking optional regime. Yeah, it's written over here. Anay shift out of the default tax regime under 115 BAC. So he is not opting for 115 BAC, he is opting for optional regime. So we need to compute his chapter 6. So all these deductions from 80C to 80U could be available to him also. Second question says, assume that for the purpose of answering this question alone, that Anay pays rent of 65,000 per month for his rented house at Mumbai to Mr. C, a resident individual. Is Mr. Anay liable to deduct TDS on such rent? If so, what would be the rate and amount of TDS? See, this question is quite easy because we understand we have a section, if you remember the section number, 194 IB. Even if you don't remember the section number, it's okay, but you should know the provision. See, if somebody is paying rent, the amount, the threshold limit is 50,000 rupees, right? The threshold limit is 50,000 rupees, and here this person is paying 65,000 rupees of rent. Then you should deduct TDS. How much? 5%. And when you should deduct TDS? At the end of the year, means the last month of tenancy. If you are vacating this property during the year, in the last month, or at the end of the year, the last month. So here, in fact, I have not read the complete question, but still, to answer it, we can say that if he is paying rent 65,000 rupees, so 65,000 rupees into 12 into 5%. How much it is? 65,000 rupees into 12 into 5%. This is 39,000 would be the TDS. Although we'll read the entire case scenario also, but on the face of it, it is looking like that 39,000 he should deduct, and when at the end of the year, right? So 39,000 we have somewhere. Yes, we have 39,000 somewhere. So 3.75 no, 5% every month no. In 194 IB we don't deduct every month, we deduct at the end of the year or at the end or the last month of tenancy, right? So Mr. N is not liable to deduct TDS. No, no, no. He has to deduct because the amount of rent is 50,000 rupees. It's more than that. So 5%, 39,000 rupees in the month of March 24. So instead, although I have not read this complete case scenario, but I can say that C should be the correct answer, right? So we have to deduct at the end of the March. Okay. And the third is, what would be the amount of interest chargeable under 234B on account of short payment of advance tax? Very, very nice. They are asking about advance tax also. So what would be the interest under section 234B? Do you remember section 234B? It says that if you have not paid your advance tax, then you have to pay 1% per month interest. 1% per month interest. Part of the month shall be taken as full month, and it starts from 1st April. It starts from 1st April of the assessment year till you don't pay your interest. So also there is a one of the special thing about 234B is that if you have already paid 90% of your advance tax, then we will not charge interest under section 234B. So this would be a pretty good question now, because we have to compute first of all the tax liability of the assessee. Then we have to see how much advance tax or TDS, TCS has been deducted or collected. So we have to compare it whether we have at least deposited 90% of such amount or not. If not, then 234B interest would be there. So this could be quite a lengthy calculation. Okay. So now it is chapter 6A. This is almost we have done TDS, and this is about 234B advanced tax. Got it. Now let's read the question. It says Mr. Anay, age 52 years, is the CEO of XYZ Enterprises Limited. Okay. So he is a CEO of this company. During the previous year 23, and he is not a senior citizen also. Okay. He earned salary of rupees 1 crore 65 lakh. He's earning salary of 1 crore 65 lakh. Guys, because we have to calculate our advance tax now, because we have, so for that we need to compute our tax liability also. And we can see that he is earning more than 50 lakh. There would be surcharge also. There would be surcharge also. So it depends 10%, 15%, 25%. So let us calculate his total income. Then we will find what would be the rate of surcharge as well. So he earned salary of 1 crore 65 lakh and long-term capital gain on sale of listed shares amounting to rupees 1 lakh 6,500, again LTCG 112A. He earned interest of 4 lakh 82,778 on saving bank account. He's earning saving bank account. So one of the question which was asking from us, chapter 6A deduction. So chapter 6A deduction, I can get it that here he would be getting 80 TTA. Why? Because he's earning saving bank account interest. Second thing is that because he is not a senior citizen. If he would have been a senior citizen, resident senior citizen, we would have given him 80 TTB, maximum 50,000. But TTA maximum is 10,000. The interest is much more than 10,000. So 80 TTA, I'll be getting it. So 80 TTA, I'll be getting 10,000. This is for sure. Okay. Then further, he has provided the following information for filing his return of income. He does not receive house rent allowance from his employer. Okay, he is not receiving any house rent allowance. Got it. Mr. Anay took a loan from State Bank of India on 27th October 2021 for repairing his house. It is self-occupied at Delhi and paid interest on such borrowing of rupees 80,000 and 1,50,000 towards principal amount towards during the previous year 23-24. Okay. So first of all, it's a self-occupied property, and he has taken the loan where the interest is 80,000 and the principal repayment is 150. Now, because we have to calculate chapter 6A also, but still, because we have to calculate the total income also. So first of all, because it's a self-occupied property and we assume that this person is opted out from the default tax regime, he is following optional tax regime. So for self-occupied property, we can give the deduction for interest. But how much is the maximum? 2 lakh or 30,000 in this case? 30,000 in this case. Why? Because he has taken the loan for repair. Agree? So for house property, it would be his 80,000 would not be allowed interest. It would be only 30,000 interest. Right? So 30,000 will be allowing under house property. NAV would be nil, self-occupied. 24A would be nil, 24B would be 30,000. So house property there is a loss of 30,000. Okay. And what about principal repayment? What about principal repayment? Sir, we understand that if you have taken a housing loan and you can get 80C, guys, please remember that is for purchase and construction, not for repair. So see how tricky the question is. You will not get 80C over here. You will not get 80C over here. Why? Because that is only for purchase and construction, not for repair. So you will not get 80C. Then Anay has made the following payments towards medical insurance for the health policies taken for his family member. They are talking about 80D. What is the limit for 80D? See, for self, spouse, and dependent children, it is 25,000. For parents, again 25,000. And if they're senior citizen, then it can go to 50,000 also. Medical premium for his brother, no. Brother would not be allowed. 80D doesn't allow for brother. Medical premium for his parents, 17,670. That is allowed. Maximum it can go for if the parents would have been senior citizen, 50,000. But it is even not more than 25,000. So we don't have any issue with it. So 17,670, it's okay with us. Then medical premium for self and his wife is 21,000. For self and his wife, and it is not paid by cash, it is paid by check. So we can allow 21,000 also. So this is 80D can be allowed. He also incurred 6,400 towards preventive health checkup for his wife in cash. See, preventive health checkup is allowed, and that too in cash it is allowed, but maximum 5,000, right? And for everybody, the maximum limit is 5,000. But it should be within the overall limit of 25 or 50, as the case may be, because he has incurred for his wife. So for already for self and spouse, for self and wife, we are already taking 21,000. So maximum it cannot go beyond 25. So 4,000 we can take maximum. So here in this case, no, they have, this is about medical insurance. So 80D, how much we will get? See, 17,670 is okay. 21,000 is okay. That's 6,400 something, but that will not go. Only 4,000 we can give. So how much is 80D? So 80D would be 17,670. Are you all getting this? Quite an interesting question. 21,000 plus 4, 25,000. 42,670 would be 80D. Okay. Then he deposit 1 lakh towards PPF. 1 lakh towards PPF, 80C. Now we can. That amount of repayment of housing loan, that is for repair. That is not allowed, but this is allowed, right? So 1 lakh we can allow in PPF. He also deposited 50,000 rupees and 250,000 rupees towards tier 1 and tier 2 NPS. Okay. Now, if you remember, guys, this is something important. So, for tier 1, we can get it in 80 CCD, and for tier 2, we can get in 80C only. 80C can cover tier 2, but for tier 2, it should be a central government employee. Only central government employee, only and only central government employees can get this deduction of tier 2 NPS, new pension scheme. So was it a was he a central? No, no, no. He was not a central government employee. Nothing was there. So it's just a company. So tier 2 deduction he will not get. Tier 2 deduction he will not get. Got it? So tier 1 deduction he can get it. So 1 lakh over here and 50,000 80 CCD 1 we can get it 50,000, because the overall limit we understand for 80C, 80 triple C, 80 CCD, it's 1 lakh 50,000 rupees, right? So it is coming under 1 lakh 50,000 only, and it should not be more than 10% of your income. But see, your income is too much, so 10% would, or obviously that would be taken care of. So 50,000 we can get it over here, and CCD, and 80C is 1 lakh. Got it? So 80C would be 1 lakh, and 80 CCD1, if you can say 50,000. Even 1B you can give 50,000. Either CCD1 you can say, or CCD1B, but either one of them, right? Because 1B is over and above that 150, and there in 1B you can already you can get 50,000 rupees. But we are taking in CCD1, that's okay, because still we have the limit of 150. That's it. Okay. He paid advance tax. That would be, we would be requiring over there tax. Okay. So we can get this answer. So first just add it up. How much it is? 1 lakh 42, then it is would be 150, 160 plus 42, 670. It would be 202,670. Got it? 202,670. Do we have this? 202,670. Yes, we have D. 202,670. Correct. Now the main thing, this, although it's a small thing, but we have to compute so much for that. Okay, now we have to compute his first of all tax liability, and he has paid some advance tax, and he has some TDS was also deducted. Okay, so we will be taking credit of it, and we will be seeing whether 90%, at least 90% of the tax liability has been deposited by this or not. Okay, so he has salary income. He earned salary of 1 crore 65 lakh. Okay, now he is earning salary income. He earned salary this much. So now there could be one confusion. Now there could be one confusion whether standard deduction would be given of 50,000 rupees from it, or it has already been taken. So generally, if they say salary income, so there could be one confusion which students can get in their examination. So whenever they say that he's earning this much salary or he's receiving this much salary, it means that it is not yet computed. It is not yet computed. But if they say like this, that this is the salary income, this is the salary income, that's it. So we will assume that it is computed, right? Otherwise, generally, they also mention in the brackets that it is computed. So as of now, we are assuming that it is not computed. So we will be giving 50,000 deduction from here. So it is 165 minus 50,000, 16 lakh, sorry, 1 crore 64 lakh 50,000 would be his salary income, and he is earning long term capital gain. This is 112A. Please remember 112A. We have to compute its tax by giving an exemption of 1 lakh, right? So 112A is 106,500. Interest income is IFOS income. How much it would be? Should I write there? I'm writing it there, guys, because here you will not be able to see. And he's earning IFOS income also 482,778. 482,778. And there is a house property loss also. And this person is following optional regime. So here we can set off house property losses from other income, maximum up to 2 lakh rupees. So we have only 30,000 rupees, right? We have only 30,000 rupees. We have seen it over here. So 30,000 is the loss. And that's it. Okay. So let us see what's his GTI. So it is 170,009,278 minus chapter 6A also, and chapter 6A we computed as 202,670. 202,670 total income. It is coming as 168,06,608. It is coming. So I'm rounding it off right here. 608 is coming. I'm rounding it off 610. Right. On this amount, we have to compute the tax. But we understand that this amount has some special income also. This amount has some special income also, because you have to, whenever you compute tax, you should see whether we have LTCG, whether we have 111A, whether we have 112A, whether we have casual income. And on remaining income, you can calculate the slab rates for individual SESI. So here we have special income. How much? 106,500. So I'll just take it out separately. So on 112A, we have LTCG. How much I'm be just deducting, or I'll be taking out 106,500. And you understand 1 lakh exemption is available from here. So on 6,500, it would be 10%. So 650 would be the tax on 112A. And what would be the tax on this amount minus, first of all, remaining income is you have to just, first of all, deduct LTCG, how much it is, 106,500. First of all, deduct this 16,06,610 plus 2 minus 106,500. So we have to apply slab rates on, I'm running short of space. So we have to apply slab rate on 167,00110. We have to apply slab rates on this amount, right? And now we'll apply the slab rates. So we understand the slab rate is on first 10 lakh, we have 1,12,500 and the remaining 30%. I'm just doing it on the calculator itself, the slab rates. It would be slab rates. Yes. I'm just calculating the slab rates on this amount. Minus 10 lakh into 0.3. This is coming as slab rate is 48 lakh 22,533. This is the slab rate plus trip 112A income is 650. I'm just adding 650 to it. So my tax is coming as 48 lakh 23,183. Now his total income is more than 1 crore, but up to 2 crore. So there would be a slab surcharge rate of 15%. We have to add 15% surcharge. Okay, I'm directly adding it to it, right? Plus 15% surcharge. Then 4% cess, plus 4% cess. So plus 4% cess. After that, I'm getting 57 lakh 68,526. 6.8. Let me take it 526, 57 lakh 68. And how much is the amount already paid? Advance tax 530 has been paid and TDS 5181 89. Okay. Just see how much it is. 5189 plus 5 lakh 30,000. 57 lakh 57 lakh 19,000 has already been paid through advance tax, and second would be TDS, right? So let's see whether 90% is paid. I believe yes, 90%, at least 90% is paid, already paid 90%. So 234B would be not, will not be there. So 234B would not be there. Why? It will not come unless and until the already the advance tax, TDS, etc. has already been paid more than 90%. So 234B will not come. It would be zero, right? Guys, there might be little bit of I believe that I have done the calculations correctly. There might be a little bit of calculation error. So you can check and also comment if there is any calculation error. Okay. But I think that I have computed correctly. So I don't think that there is any interest which you have to pay. Why? Because 90% has already been paid. See, we have calculated so much and the answer is coming as nil. Okay. Good question. Otherwise, it was not so easy. It was quite a tricky and good question. If your concepts are good enough, you'll be able to do it. Otherwise, just keep on practicing. Your concepts will become strong. Keep on practicing. On 20th October 2023, Priya, minor child, gets a gift of 20 lakh from her father's friend. On the same day, the amount is deposited as FD in Priya's bank account. On the said deposit, interest of 13,000 was earned during the previous year, 23-24. in whose hands the income of PR shall be taxable. Okay. Now, if PR is not earning any income because of her talent, knowledge, skill, manual labor, no. Nothing is mentioned about the child, that the child is handicapped, child, no, nothing is mentioned. So the income would be clubbed in the hands of parent whose income before such clubbing is higher, right? So, first of all, she has received a gift of 20 lakh from her father's friend, non-relative, taxable. Non-relative, it is taxable. It is more than 50,000 rupees. So 20 lakh would be also be taxable, and 13 lakh would also be taxable in the hands of parent whose income before such clubbing is higher. So 20 lakh, 13,000 minus 1,500 deduction should we give it? So it depends upon which regime they are following. They are following default regime. They are following default regime. So if the assessee is following default regime, then there would be no deduction of no exemption of 1,500 also. So 20 lakh plus 13,000 would be taxable. 20 lakh plus 13,000 would be taxable. There would be no deduction. So it means 20 lakh 13,000 would be taxable, right? So 2011 shall be taxable in PS father. No. 2013. We will not give that 1,500 exemption. 2013 is taxable in the hands of Pia's father. Could be, but it depends upon mother's income also. 2011 is not. 2013 shall be taxable in the hands of Pia's father or Pia's mother, whose income before such clubbing is higher. Very good. This is the correct answer. Okay. Rohit, a resident Indian, has incurred 15,000 rupees for medical treatment of his dependent brother, a dependent brother who is a person with severe disability and has deposited 20,000 with LIC for his maintenance. Rohit shifts out of the default tax regime. That means he's opting for optional regime. He can take Chapter 6 deduction, and there this person is severely disabled. So we have 80 double T, disabled dependent, where there is a flat deduction of 75,000, and if the person is severely disabled, 125,000 flat. So Rohit would be eligible for deduction under 80 double D. How much? 125,000 flat deduction. Got it? Quite good MCQs. Descriptive question I'll be continuing in my next video. Till then, thank you so much. Bye and take care. Please keep practicing. This is a good MTP released by the Institute. Bye. Take care.